What's going on, you guys? My name is Zach Hartley, and in this video, I'm going to share with you everything I know about cryptocurrency taxes here in Canada. Let's dive right in. Okay, so just to get us started here, I am not a tax accountant. I am not a CPA. You need to go out and speak to an expert if you're dealing with a whole bunch of money. This is just my basic understanding, my knowledge, and I'm trying to share it with you in this video. So first of all, cryptocurrency in Canada is regulated by the CRA, also known as the Canada Revenue Agency, and they look at cryptocurrency as a digital representation of value, and they treat it like a commodity. That means that it is taxed nearly the same as stocks and bonds and property. Now, there are certain events that will cause you to have to pay taxes on your cryptocurrency. Those events are known as dispositions. Examples of a disposition are when you sell your cryptocurrency, when you gift it to friends or family, when you trade it for another cryptocurrency like Bitcoin for Ethereum, or when you purchase something with your cryptocurrency, or when you convert it back into Canadian dollars. All of those events are known as dispositions, and they will cause you to trigger a tax payment. Now, how is crypto taxed? Well, luckily, you only have to pay taxes on your profits. And so at the end of the year, you need to add up all of your dispositions to figure out if you made money or lost money on cryptocurrency. If you lost money, you don't have to pay any taxes, which is really nice. Even on the one or two good transactions that you did make, you don't have to pay taxes because you had a net loss. However, if you made money on cryptocurrency in 2021 or in whatever year, you are going to have to pay taxes on it, and it's really important that you understand how those taxes work. The amount of tax that you pay depends on if your profits are capital gains or business income. And so when you go to file your taxes at the end of the year, let's say you have $10,000 in crypto profits, you need to declare to the CRA whether those profits are capital gains profits or business income profits. And I'm going to walk you through how to decide that right now. So first of all, capital gains versus business income. If trading is a business for you, you'll need to consider it business income. So for instance, if trading and investing and working in the markets is your business and that's how you make a living, then you can need to consider that income as business income, and you need to pay income tax on that. It just kind of makes sense, and that's what the CRA is really focused on here. And there's four main factors that you can use to try and determine if the profit that you have is business income or capital gains. So the four factors that the CRA looks at are how often you trade, how much you trade with, how much you make, and your experience trading. If you're trading a lot, you're trading with a bunch of money, you make a bunch of money, and you have a lot of experience, the CRA is going to look at you and they're going to say, you look like a business, you smell like a business, you need to pay tax like a business, and they're going to put you in the business income bracket. Now, if you have declared that your income is capital gains and you haven't paid enough taxes, you're going to get a hefty bill and possibly a fine. So this is definitely an important thing. If you trade for a living, you need to claim your profits as business income. That's what they're looking for here. And the reason that a lot of people don't want to do that is because the advantage for capital gains is massive. Now, that advantage is right here. As you can see, on capital gains, so your $10,000, if you claim that that profit is capital gains, you only have to pay tax on 50% of the profits. That is different for business income, where you are taxed on 100% of the profits. So capital gains only pays tax on 50% of the gains. Business income pays tax on 100% of the gains. Now, the tax rate at which you are charged is based on your marginal tax rate. You can see that it is the exact same whether you're in capital gains or business income. It is your marginal rate, and your marginal rate refers to if you make $1 more this year, what tax bracket are you in? And I live in Alberta. I live in Calgary, Alberta, and so this is what it looks like for me. So my marginal rate for my first $49,020 is 25%. But if I make $1 more, that puts me in the 30.5% bracket, meaning that for every dollar I make, 30.5% is going to the government, the Alberta government, and the federal government in the form of taxes. Now, if you move all the way down here, you can see that the more money you make, the higher your marginal tax rate is. And so if you make a ton of money, let's say you make $100,000 at your salary job, and then you make $50,000 part-time trading, well, that is going to put you into this bracket right here. Actually, it's going to put you into the 131 to 151. It's going to put you in the 38% bracket right here. And so as your marginal tax rate goes up, you're gonna have to pay more tax on it. So here's an example. You make $60,000 in crypto profits and you have a full-time job where you make $100,000 in income. If you can justify and make the claim that that 60K came from capital gains, you would only have to pay tax on 50% of it, leaving your tax burden at $30,000, and you're in the 36% bracket, leaving you with a $10,800 tax bill. However, let's say that you were trading every single day in order to earn that $60,000 in crypto profits. That's probably going to be business income, and you'll be taxed on the full $60,000 at 36%, and that is going to put you at $21,600 worth of taxes on your crypto profits. Now, this is an oversimplified example. Definitely go through an online calculator to calculate it for yourself, but this is basically just the principle behind it. Now, a couple of things you're going to need to keep in mind. One is the CRA is going to need some documentation, and they're going to ask you to hold on to your documents for a very long period of time, and these are the documents that they are going to want to see from you. So for instance, the date of the transactions, the receipt or purchase or transfer of the cryptocurrency, the value of the cryptocurrency in Canadian dollars, the digital wallet records and addresses, and a description of the transaction. They want you to keep all of this information. It's not a legal requirement, but they can ask to see it. So I highly advise gathering all of this data every single year. And then what you need to do is, if you're on multiple brokers, you need to figure out all of your transactions, your net profit or your net loss, and you need to pay tax based on that amount from the data you're gathering from your brokers at the end of each year. Now, if you're interested in seeing what cryptocurrencies I am holding, which ones I'm buying and selling, you can definitely check out my Discord chat. That is where I post all of my trades and all of my technical analysis about the markets, as well as a weekly watch list. And it is a community filled with over 800 traders and investors. It's only $5 per month, and the link is in the description to this video. I would love to have you there. I'd love to share some more knowledge with you, and you have full access to ask me anything you want in that Discord chat. So I highly recommend taking me up on it, and the price may go up soon, so please check it out, and we will see you guys in the next video. Good luck trading, good luck investing, and we'll talk to you soon.